Well. Good morning, everybody. It's a stretch to say good, I think. How are you, buddy?
I've been better. It's a rough morning, I think, across the board for everyone, but hopefully we'll get through it together.
So, look, just before we go on, it's not very often in my career I've seen markets like this since we were last on air. On Friday, of course, we had the news about China retaliation, and then a big move on Friday afternoon and evening, but also overnight last night, 11 p.m. Woof, last night. What a shock. So, look, I know everybody's probably suffering. I feel your pain. Trust me. If there's anybody in a position that they're in a special bad way this morning, my email's open. I can't help you with trading inquiries because that's not my desk. This man will give you an email for that. But richard.mcdonald@ig.com. Any inquiries this afternoon? If you have had a shocker, if you're hiding losses or anything like that, feel free to reach out. And let's see how the day continues. But let's get into it. I did not expect some of these moves. Ronnie, shall we take a look at the overnight moves in Asia? So there we go. Run us through those.
Yeah, starting off in Japan, the Nikkei dropped 6.56%. Hang Seng Index down 11.25%, down 20% year on year, and Shanghai Composition is down 6.83%. South Korea is down 5.09%, and Taiwan is down 9.07%. So it's red across the board in Asia, and I don't see the bottom in sight, if I'm being completely honest.
I don't think anybody knows.
Yeah.
I think that's what the last 48 hours of markets have taught us, that nobody knows a thing. Doesn't matter how long you've been in the job. I certainly did not see. Our weekend markets, for example, were suggesting the market, Nasdaq would be down 1.6%. And that was at 9:30, 10 p.m. last night. And then 11 p.m. it's down 5%. Like, just absolutely incredible. So let's go through that and more in some overnight action. So coming up on today's show, we've moved a little bit from the normal show. We tried to bring in people that understand what's going on, what the specialities to discuss. So, of course, Ronnie and I doing the opening bell, seeing what happens on this London Stock Exchange and in Europe at 8 a.m. And then fast markets are going to be a little bit different today. Ronnie and I are going to be discussing what happens to people's accounts in situations like this, what they can do, some of the remedies, some of the risk management tools that you can go through. We've all got those big red numbers on our screen at the moment. So what can you do with regards to that? Then 9 a.m. we're going to see how those all sessions opening bell is. So let's see how the US stocks open with regards to where the futures are right now. Trade expectations with Martin Harris. Martin Harris is going to be running us through some of the longer term views and some of the tariff chat. And then trade of the week, Axel. He was short Nasdaq last week, so he's nailed that one, has Axel. And then technically speaking at 9:45.
Yeah. We're looking in for quite a rough morning, but hopefully we can provide some insight in this morning. And let's see what the other overnight moves are doing. So the S&P is down 3.05%.
That's unfortunately, we have to update that. That's now down 4.2. That's how quickly things are moving.
Yeah.
Since producer Phil wrote this slide.
Let me bring up my chart. So we got US Tech. So US Tech, as it's called on the platform, it's down 5.15. Dow Jones 3.45. US 500, 4.2%. Germany down 6.10%. And the list goes on. It's red across the board this morning. But just to reiterate what Rich said, if you are in deep losses, call us. Help us manage your exposure and your risk. Sticking your head in the sand won't make the losses disappear.
Yeah, that's exactly it. It's one of those ones. And I mean, I've been looking at my positions all weekend, trying to work out. I've already rolled a futures position. Not too much sleep last night.
Personally, I slept like a baby.
Yeah, and to be fair, we have a laugh with Ronnie about his demo account, but mate, I'd do anything to be in a demo account right now.
Well, if it makes you feel any better, my demo account got stopped out. I tried to pick up the bottom on Friday and, well, wasn't even close.
Yeah, even there. It's just, there's one standard deviation moves, there's two standard deviation moves, right? And we've been, US markets down 5, then down 6, and now down another 4. This overnight. It's just absolutely incredible the way that these.
Also, reading the overnight news, it's not clear where we're going. Is Trump going to succeed with his art of the deal? We saw some countries coming to the negotiations table: Vietnam, Cambodia, some of the most hurt ones. In Europe, it's actually coming down to Giorgia Meloni, who's one of the sort of EU presidents or prime ministers who is looking to actually do nothing. Mm-hmm. So it's a bit of a confliction in Europe on how to retaliate, or if you're going to come back, or if you're just going to stay passive. So I think we're yet to see what's going to happen. I think there's still a lot more news to come out. So I think it's still very much too early to say what the result of this is.
Look, in some ways, they told you what they were going to do. They were going to get debt refinancing cost down, which he has done that 10-year in free fall, 392, I think it was last time I looked. The 2-year, 350, 3.5% on the 2-year.
Yeah. I mean, that's what they want to do, right? And that's what we've been talking about all this time along, that they have an unsustainable debt level. Mm-hmm. And, 1% of a difference in the interest cost is billions of dollars in cost. So this is coming into play for them. And the guy's out of office in 3.5 years, so he doesn't care what happens after.
Nah, I don't think that's anything to do with it. Oil price, he told you he was going to get the energy price down, and he's certainly done that. We chatted last week, is oil going to go sub 60? And today we see it 59.6 already, $59.
I called it. I should have made a bet. Did anyone agree on a bet with me that oil would go sub 60? Because it's about time that I win a bet.
Right. Speaking of the winners, let's have a look at who's on the chat this morning. Good morning to you all. Good morning, Jesse. Julian's with us. Monkey Man, Hang Seng, highlighting down 10%. Glad that you've all got your coffees in hand. Julian needs a whiskey. That makes a lot of sense. Although I haven't drunk for 12 days now, and it's probably. I mean, this could drive me to drink, but it's certainly
that sounds like
the head clear.
Sounds like a healthy coping mechanism.
Yeah. Parky77 has spotted we do actually have matching shirts. I hadn't even realised that.
Yeah, we were
very matching.
We was yesterday when we were on FaceTime saying goodnight to each other, laying in bed. We said, "What are you gonna wear, Rich? I'm gonna."
I wish my beard could be as bushy as yours. Monkey Man Bloodbath, indeed it is. Good morning, Spiders. And Neil asking, is anybody short Delta? That's I keep on trying to take my long Delta down, but we've survived so far. But ATM's not going to be pretty on these UK stocks. Well, I've got options. I mean, Tesco
did very well.
Hopefully it'll be all right. Vodafone, what was that, down 6% or something on?
Yeah, I mean,
Friday.
it's quite rough, and
not
it's
quite as
also
defensive as,
it's sort of like the bloodbath as Monkey Man is describing it. It's been indiscriminatory. We were looking at, remember when we were looking on at the lists on Friday and everything. It's even companies you'd expect to do well in a market like this, they were down. Gold was down, which has been the safe haven, but that's been rallying quite a lot throughout the year.
Yeah.
Bitcoin up a little bit.
Well, until yesterday.
Yeah. Coinbase came down with it. So yeah, it's a rough morning.
Monkey Man just pointing out that Bitcoin's taken another bath, down 4.5 this morning now. So hit Trump where it hurts.
Yeah,
and the whole Trump family long Ethereum as well. So that's going to be.
It hits me where it hurts too, mate. S&P and Bitcoin.
Well, that's everybody, right? Jugger saying I have to roll some long puts out and down. That's exactly what I just did about 4 minutes before coming on the show, because the weeklies are already open. And I put on a horrific position on Friday after the show. Probably about 15 minutes before the Chinese tariffs came out, I sold some puts.
Yeah, we were in the office, me and a couple of others, and it was surprisingly calm that morning. We saw a little bit of Friday morning. We saw a little bit of an uptake.
53.80 we were trading.
Yeah, we saw it's coming back a little bit. The worst is done, and then we just see on Bloomberg, China retaliates with 34% tariffs. And as soon as we saw that, our phone just didn't stop ringing until we went out.
Wow. How many calls do you reckon you took on Friday?
I didn't count, but my colleague Gavin counted, and he had 82 calls that just non-stop didn't stop coming.
Luke and Wardy did another 90 each on the evening shift.
Oh, blimey. I did tell Luke, let me know if you need me to jump on. But I also sort of blocked myself, because after that day, we went out for a few bevies, and I said, listen, I'll jump on if you need me, but I'm about 4 pints deep now.
Oh, jeez.
And he said, yeah, definitely don't jump on.
Right.
Which would never do. I would never work while intoxicated.
So, goes without saying, I got stopped out of all my mining positions on that China announcement. So, thankfully, a little bit of discipline kind of held me in good stance there, because otherwise, well, I don't think I would have lasted past 8 o'clock this morning.
Yeah, well, that's what a stop loss is for, isn't it?
That's it. Yeah, absolutely. Now, volatility. We got vol up 10% this morning. Let's take a look at how vol's traded over the past. Well, there we go. That 25 level that I've talked about so many times, you can see as soon as we breach it, then that thing does not stop. Up 10%. We're up 17% at one point at about 11:30 last night. So it has come down from 17 to 10.5. That's one thing, but tough one to call, very tough one to call. But you can see, let's put it in some perspective as to where that is relative to last August. Look at that, exactly the same top.
Yeah,
I didn't even check that before the show. Exactly the same top. Incredible, right? So this is like August last year, but only lasting longer.
Exactly, yeah. But something to give a little bit of, maybe a little bit of hope in a morning like this.
Give us some.
I feel like we need it. I was out this weekend with a mate of mine who works at a very big bank who shall not be named. And he works at a trading desk, so they have their own book. They also trade for other institutional clients. So I tried to, get some inside information out of him.
Maybe the wrong terminology.
Which I would never do, obviously.
Yeah, I think you got the wrong term there.
Yeah, but I was just trying to get a bit of insight into what's happening from their side, right?
Yeah.
And what he told me, which was kind of gave me a little bit of hope, was that both them and their clients have been laying quite flat going into this. Because it was an event risk, right? We knew what was going to happen. There was a set date. So they've all been laying quite low and flat with their exposure, waiting for it to sort of hit the bottom. And then everyone got dry powder ready to capitalize on. The question is now, when do we find the bottom? I don't think anyone dares to be the first one to try to call it out, right?
Yeah, I agree, but there's certain things that you notice in markets that are forced selling, and last night was one of them, right? 11 p.m. last night was forced selling, clear as night and day. Now, what happens today could well be more of that. So, you know, don't know what happens. It's about surviving the next 4 to 8 hours. That is, you know, your capital preservation, and just making sure that you are still there when some kind of Trump tweet comes out, you know, tomorrow night or whenever it is.
And we're also seeing, or I think we're seeing the start of a crack in the relationship between Musk and Trump. I mean, everyone called it, right? Everyone said in the beginning, this friendship isn't going to last for long. Just question is how long. And now we're already seeing Trump and Musk sort of having a little bit of crack, because Musk is saying that he wants tariff-free zones between Europe, because obviously he has gigafactories in Germany. So that's something that can take and even, you know, create even more volatility in, for example, Tesla.
Or is he doing his backdoor negotiations? You know, there's, you know, we'll never know what's going on.
Exactly, but we can only speculate on what's happening. But we are seeing the first sort of chink in the armor.
Now, Dan Ives, the famous #1 tech analyst, cutting his target price in Tesla. What is he's cut it by 40%. What's he cut it to?
150? What's it at now?
340. 50% upside. He's saying there's still 50% upside in Tesla. So it was above 500.
I'm sorry, I'm just trying to get my head around this. Pricing Tesla at 500, and now he's cutting it down for...
And the funnier thing is, Tesla share price will be down today because of that. Because it's not going to 500 anymore.
This is why Axel Rudolph is my favorite tech market.
Oh, Jugger, you don't have to retract that message, my friend. I think, yeah, there we go. Musk and Trump, one thing in common, they're just thinking about themselves. I'm trying to work out exactly what he has in mind, right? If he's trying to refinance the debt at lower costs, that makes sense, right? But there has to be a better way to do it. There has to be.
Not to drag the entire market down with this. And
well, not the entire market, it's the economy. The market's responding to what he's doing to the economy.
Exactly. Yeah, this will have long-term effects on company earnings, and also, you know, global trade obviously, but company earnings will take a beating of this. So this is something that, you know, even when we are blown past this sort of the tariff talk, in 6 months' time, in 1 year's time, when earnings come out, this will be reflected, and we'll have this sort of aftermath of this. So yeah,
and it will be the Trump crash.
Because
it is a crash now. You know, there's Frosty just says huge rally pending. That's the thing. When you've had a peak in vol, and if vol doesn't go through those highs today, have we seen the top of vol? And if we've seen the top of vol, then that sort of forced selling, you know, that can start to abate. Yeah, right. What have we got economics this week? Well, CPI Thursday, and PPI Friday. So who knows, you know, what situation we'll be in by then. But
I mean, we had NFP on Friday, and I've never been never have I ever worked and NFP has played so little effect. Literally no one cared about NFP on Friday.
No, it lasted about 12 minutes.
Yeah. I mean, macroeconomic, we had Germany coming out with a balance of trade this morning at 7 a.m. Forecast was 17.8 billion, came down at 17.7 billion, which was below estimates, but still above the previous of 16.2.
Oh, just seeing the DAX now looking down 6.5% pre-market. Right, 10 minutes time, we're going to see some numbers on our screen.
Oh, mate, I was talking to my mother yesterday and she was like, have I lost everything? No, you haven't lost everything, just some of it.
Just 15% of it.
Yeah, pretty much.
15% of everything. Bigger Biaz saying good morning. Hope everyone is fresh and green from a restful weekend. Wasn't it beautiful? Let's focus on that. Let's focus on the sunshine in the park yesterday.
I had a lovely weekend in the park, actually. I went to Victoria Park Market, had a Vietnamese iced coffee. Life was good, man.
Living the life.
Living the life.
That is the demo account life, people.
No P&L, no worries.
Right. So we've got Matt Arbour joining us at 8:20. That's going to be really interesting because we can talk about what he's seen in the past 48 hours as well. Ronnie, what can you liken this to before? What situation have you seen? August the 5th, is that the only one that you've seen like this before?
I mean, I think the last time we saw this sort of massive sort of sell-off, I think it was the sort of beginning of the COVID crash. That's when it came down. 2020 was in March 2020. On Friday, it was a lot of talk about the lowest level we've seen in the S&P since March 2020. Yeah. So I think that's been the sort of time where we've seen this sort of indiscriminatory sell-off. Everything's just been sold. I wasn't around in 2008. I was about 9 years old, so I didn't quite well read on the markets by then.
This is, I think 08 you had a much clearer catalyst. It wasn't being driven by something you know could turn at any point.
Yeah.
Right? Because one tweet and we are 10% higher in a flash. And that's the problem. That's what's really...
But it could also go the other way with that one tweet. We could go down a further 10%.
Right, and that's what's happening.
Yeah.
Right? You had Lutnick on TV yesterday, who happens to be long bonds, as Bill Ackman pointed out. So Lutnick doing very well from that. But it's this kind of no news is bad news. Yeah. Right? It's not often you have a prolonged sell-off like this that is it's getting more aggressive as it goes.
I think, yeah. So when is it that the majority of them are going into effect day after tomorrow, the 9th, right?
The Wednesday, yeah.
Yeah, exactly. So I think today, tomorrow, the main focus is going to be on countries either getting extensions into implementation or entering negotiations.
Yeah.
And I think those would be positive catalysts that one needs to look out for. But like you said, if we hear nothing, if we just come to the 9th of April and nothing has changed, that's when we're even further down.
Yeah, right. On that happy note, let's take a quick 2-minute break. We'll be back for this ugly, interesting, and not long anticipated market open. We'll see you in 2. Right, here we are. A sell off 4,830. Now, we got a lot of you on this morning. It's clear there is a correlation between market volatility and the number of viewers. So if you're listening for the very first time, we welcome you. Like and subscribe the chat and all that, rubbish. But yeah, subscribe so you see the videos. We'll update during the day as well about what goes on. But welcome. We apologize that it is such a horrible morning that awaits us in about 2 minutes' time. Ronnie, what are you seeing out there?
Yes, so we have Singer, the market maker. They are indicating the UK FTSE 100 down to open minus 221 points. What else do we see?
Which is 3.5%.
Yeah. Shell indicating to open minus 2%, which is...
Is that all?
Yeah, it's quite conservative. I'm not sure I agree with that.
It's uncrossing there.
Yeah.
So I guess it's like, well, what's dragging the FTSE down? FTSE's down 3.5%. There must be some stuff that's down 10. I guess. HSBC.
Yeah, I mean, FTSE is mining heavy index, and they've taken even a further hit. Sorry.
It's very defensive as well. I'll be interested to see some of these moves down 3.5%. What exactly can be down so much in the FTSE to take it lower? AstraZeneca, Glaxo.
But the problem is we're in a position now where, because everything else is down, we're more likely than not seeing people selling off their positions in AstraZeneca, in GlaxoSmithKline,
that's true.
to cover the losses in their other parts of the portfolio.
Which is why gold's coming down as well.
Exactly, because people had a lot of running profit there.
Yeah. Standard Chartered, Andrew McKelvey, absolutely correct. Standard Chartered going to be ugly. Ronnie, do you want to do the honours with the bell, and I shall get some of these European moves.
I've got it ready here. I'm ready. I want the control room to count me down. Control room.
Right. Okay. Well, look. Good luck, everybody. I certainly hope that we are potentially opening at the lows. Let's see how we go here. Right. Now, there will be a lot of extended openings, remember, because if a stock is moving up or down by more than 5%, then it doesn't open until 5 past. So you can see early moves, the obvious ones. You've got, JD Sports down 5.
But look, British Land being down close to 5%, that sort of proves our thesis of selling off the defensive to cover the other ones. But yeah, it's across the board.
Yeah. So look, it's pretty standard markdown across the board, right? You've got, it looks like BP is in an extended auction. That's not good. This is pretty much across the board. Look at this, 2 and 3% everywhere. You've got Tesco down 0.5%. There you go. So Tesco, one that you can hide away in.
Gone as well. I'm quite worried about the big banks, the Barclays, the Lloyds, the NatWest, where they'll open up.
So all the banks looking like they are in extended auction. So extended auction on the banks. Right. Okay. I think you can stop shouting, Phil. Phil just shouting anything to me down more than 3%, which unfortunately is everything.
He's going to be shouting. He's going to be shouting all week.
Right. BAE down 5.5. One of the worst performers. That, again, as Ronnie points out, one of the big winners recently. So that is where people are taking profits. We're seeing BHP down 5, HSBC down 4.7. Let's see what this is doing to the FTSE with those stocks open. FTSE, worse. Wow, 4.8 on the FTSE now. So German DAX down 7.8. I do not remember seeing the DAX down 8% before.
Yeah, I mean, I think this is probably a good day for all the DAX bears. I know there's quite a lot of them. They've been suffering quite a lot recently. Yeah, it's just across the board, it's continuing downwards.
Right, movement in Europe then. Adidas down 7. Right, Adidas bouncing on Friday because remember, Vietnam had already negotiated tariffs before Trump even announced them on Tuesday. That was leaked afterwards, and so Trump used that card on Friday to stop the sell-off in the likes of Nike. So Nike finished up, I think, 3% on Friday with the market down. But Adidas also rallied, now down 6% today.
Yeah, the airlines are taking big hits, which I don't think is very justified. Especially with the lower oil price, this is going to lead to better operating margins for these companies. But the rest of them, I mean, Anheuser-Busch, I mean, they're probably the world's biggest. They are the world's biggest beer producer with productions in pretty much every country but America. L'Oreal,
Lufthansa down 7, Siemens down 10. But I think most people will be more interested in the UK, won't they? So shall we stay centred on that at the moment? Likes of Centrica down 4.6.
yeah, Tesco was down 0.5% when we last checked. It's now down 2.5%.
Yeah.
It keeps plummeting down.
Right, what are the ones that are not open yet? They've still got 60 seconds to go. BP, NatWest, Lloyds, Prudential, Barclays, Whitbread, Legal & General.
Rolls-Royce is
Rolls-Royce
going to take a big beating following the same principle as BAE,
EasyJet and IAG. Right, so
it's been real.
Airlines, banks, a couple of the more spicy mining stocks, and the oils.
Yeah, St. James. Oh, there is not going to be a lot of wealth to manage these days. Yeah, I'm not very optimistic. It's going to be like a jump scare.
Oh dear! Right, here we go. Here is the open. It's not going to be pretty, guys. What are we going to get here? Should be any second now. Well, we hope it's any second now, because if it's 10%, then we're there. They are starting to open up. St. James's Place down 7, Burberry down 6, Prudential down 6.5.
Yeah,
Rheinmetall down 25%. I'm hearing in Germany, down 25.
And
right, there's Rolls-Royce down 11. So these defense stocks that have been the big performers getting hit heavily.
Barclays down close to 8.5%.
Wow.
Phil has now mentioned Santander 6 times, so we have to let you guys know that it's down 11%.
Right, BP down 6.8. Lloyd's at 61 pence. This, this is forced. It feels forced.
When was the last time we saw Lloyd's?
Really horrible. So yeah, sorry guys if this has not been a welcome open for you. Let's see if there's any bounce from here in the futures, or where are we looking now? S&P staying relatively stable. 48.25 it was before 8 a.m. Maybe some people were short the US futures before Europe opened, because we're seeing real selling come through in Europe now. Germany down 9.
Yeah,
this
Germany
is
down.
just...
FTSE down 5.5. Oh mate, look at FTSE.
So vol now up 14, right? So not quite as high as we saw it at 11 p.m. last night, or 11:30, but volatility higher than it was certainly about an hour ago. Right, is the FTSE going to stabilise at 5? What do you think? That's the poll. Our first poll of the day will be FTSE on the close higher or lower than down 5%. FTSE higher or lower than down 5% at the close today. That's the 4:30 close. Let's see what your feeling is out there.
I mean, FTSE is down 1,300 points since its peak in March.
And you say March like it was a long time ago. What?
Yeah, it was. Yeah.
Yeah.
It's just looking at the weekly chart. It's just straight down. March was last month. We're in the first week of April. Blimey.
Push. Right. Well, you can see. Oh, you can't really see it there, can you? My mess that we've got there. A little bit of avocado. I've just ended up with some avocado on my book. I must have had a bid in there from. Geez, everybody check that you haven't got some bids in your orders somewhere, because I've clearly had a bid in avocado, and it's just dropped right to it.
Yeah, avocado's down 9% on the opening.
Well, that would do it.
Yeah. The big banks, so Lloyd's down 5.5%, Barclays down not very far from that, and NatWest is down 6.5%. Yeah, it is dire. Sainsbury's down 3.5%, BT down 5.5%, Marks and Spencer 3%, Aston Martin down at 56.
56 pence.
Yeah.
Oh, Trump, you're going to kill one of the greatest companies. Not the greatest stocks, but one of the greatest companies. Right.
Diageo down 4.5%.
Did that poll work? That wasn't there for long. Yeah, FTSE, does it finish higher or lower than 7,600? FTSE, does it finish higher or lower than 7,600 on the day? Let's leave that poll open for a while. Interested to hear your thoughts. Currently trading 7,586. Right, Ronnie.
Canal Plus down 9.5%. Melrose Industries down 10%. St. James down 8.5%.
I put on a small FTSE hedge this morning against some short puts, and that was about an hour ago, and I'm up 300 points in it. This is absolutely insane. Right, I'm going to vote. I know which way I think it is. There we go. Right. Oh, I'm tempted to close that hedge. I'm going to do it. Right, there's my first buy of the day. Buying 1.5 contracts of the FTSE at 7,578. Bad habits die hard, Ronnie.
Let your winners run.
Yeah, well, that was, yeah. Short FTSE was definitely a winner. Okay. So, right, in about 4 minutes' time, we're going to step away from the screens for a little bit. And Ronnie and I are going to talk about how to look at this sort of thing when it comes to running risk, okay? We're going to run through risk management. We're going to run through options, as in not options and derivatives, but what options you have. We're going to, run through, from Ronnie's experience on the desk, from my experience, making a lot of mistakes in trading over the past 20 years. We'll run through some of those. Yeah. And I think it could be useful because, people certainly are fully justified to panic on days like this. And it doesn't help you keep the head, does it?
Yeah. We can't give you any advice, but if you do have any questions or anything that you wish to get clarified, please do drop a comment and we'll try to cover it in the best way that we can.
That's it. So questions in now, anything you've got regarding, of course, we can't give advice. There's no point in us giving views on the market because this kind of thing is just people cutting, right? This is people getting cut by their risk manager, tap on the shoulder, get it off. And that's the problem. So, right, we'll take a quick 2 minutes break and we'll see you in two, and we'll be running through risk management and techniques for handling volatility like this. Join us shortly. Hi guys, welcome back. So we're going to try our best now to run through any of your questions. We're going to run through, well, my experience going back 2001, Ronnie's experience going back to 3 weeks ago, but yeah, Ronnie's experience on the desk, taking all these calls in situations like this. A quick story about my work experience. So my work experience started on the 10th of September 2001. So my very first 3 days of any of this stuff on a trading floor was, of course, the terrible attack on the Twin Towers, but also seeing the aftermath of markets being shut. Nobody knows what was going to happen. You know, it was just so unexpected because now we're a lot more au fait with terror attacks, but then it obviously just came out of nowhere. So that was my second day, and there's only a few times I've been scared looking at markets, and at 11 p.m. last night I was scared.
Yeah, I don't think you're alone in that.
That could have been anything. I thought I might wake up to a crash this morning, like a proper down 15%.
Yeah, I mean, looking at probably an Asian crash.
Well, yeah, it did. It happened, right?
Yeah.
China retaliations not looking particularly helpful for their equity market at the moment. But yeah, so 2001, 2008 was more of an ongoing process, and it kind of beat you down every day. But I don't remember getting actually scared, I don't think. I didn't get scared in COVID. January 2018, my worst day ever. Actually, I think it was February 2nd, February 3rd. It was Volmageddon, and it was a day a little bit like what we've seen in the past 4 to 8, 72 hours. Market was too high. There was a taper tantrum about interest rates going higher, and vol doubled in one day, and that was it. Boom, doubled in a day, and that was like proper tears.
Each their own, I guess.
Cry me a river.
Exactly. I mean, the thing is, if you look at, you know, any sort of index chart or American S&P 500 or any sort of global markets chart, if you zoom out over 100 years, every couple of years or so, you will see a downturn, and then it'll come back, and you will see a downturn continuously every couple of years. Yet
not in 3 days, though.
Not in 3 days. That's the thing. That's the thing. We do see crashes, but we don't see the sort of prolonged crashes where no one really knows where the bleeding is going to stop. And using the metaphors as Trump, the patient is out of the operation. I don't think the patient is out of the operations, and I don't think the patient can go.
Sometimes you've got to take medicine to get better.
Yeah, but this sort of morphine is needs more than that.
Boise pointing out the FTSE's at the same level it was 7 years ago. Is that right? 7 years, 2018.
TP saying this feels more like 1929. Very impressive that you're still up with technology if you're around for that.
Now, tell me, is that TP from Texas? If that is TP, then he is a very, very big part of Tasty. So, TP, great to have you online. If that's you, great to have you online if it's a different TP. But, you know, very, very strong welcome to the show. Now, what can we do in this sort of situation, Ronnie, right? Now, I had to come to you this morning, and because last night there was a chance. If the S&P was down 10% overnight, I would have been stopped out, gone, right? That's all my capital gone. When people are in that kind of situation, you need to know your equity so well. You need to know your risk, and you need to know your liquidation levels, things like that. Can you please run everybody through what those are when it comes to spread bet and CFD?
Absolutely. So, as we all know, when you trade on spread bet or CFDs, you're trading on leveraged derivatives, meaning you don't actually own the underlying. You pay for a small percent of your exposure, meaning you pay for the tip of the iceberg, but you got this sort of exposure, meaning your risk management is even more vital in this point.
Huge.
So therefore, there's a couple of things that you need to sort of have into consideration when you are trading and you're looking at your sort of account health. One of the things is your account equity. And what that means is your equity is made up of two things. So it's your cash balance, so how much actual liquid cash you have on the account, plus minus running profit and loss. Sorry, Rich?
No, go on. So I don't usually show my numbers on the account, but I think on a day like this, it'll be useful to show people exactly what we're talking about, right?
Yeah.
So you can see my equity there at 64%. If that's what level would you say is dangerous?
Yeah, so it's at 100 you get closed out, right? You use 100% of your equity, you get closed out. I think in a position when you're at 65%, you're getting north of 60. That's when you sort of have to take a look and see, okay, where are my stop losses? Am I, positioned am I positioned for a further downfall? Is the market moving towards a direction where I can go up and use 100% of my equity?
Yep.
And which is obviously nothing that you want, right? Have a look at your accounts. This is a time where a guaranteed stop is coming in handy.
Okay.
So we obviously have regular stops. However, regular stops are at risk of slippage.
Yeah.
Meaning if the market gaps and we're unable
like it did at 11 p.m.
Exactly. If the market gaps and there's no bid in the underlying, there's no bid or offer in the underlying, and we can't get a price to close your position at, we'll close it at the second best price. And there can be first available, right? And there can be a difference between your stop level and the actual level that you can get stopped out at. Not because IG is profiting off this is simply because we're unable to get a price in the exchange.
That's it. Yeah.
However, if you use a guaranteed stop, using a guaranteed stop, your position, as the name says, will be guaranteed. So if I set my stop level at X and the 500 or whatever it may be, and the position and the market goes down from 600, blows down to 300, your position will still be closed at 500 because IG will then take on the slippage risk.
Okay.
Now, the cost of this, there's a small premium to be paid, a few points. However, depending on the market, but if you select guaranteed stops, you'll be able to see what the premium will be. Usually it's a few points that will be added to your margin, but this is only charged if the guaranteed stop is actually triggered. So if you close beforehand, you'll get that back.
So yeah, pay as you go.
Exactly.
Pay-per-view. What products are guaranteed stops available on?
It should be available. There's no sort of certain markets we don't have it simply because there's too much volatility. Yeah. But at the majority of markets, you should be able to see it. And
could I have put a guaranteed stop on Friday and run it over the weekend?
Yeah, you can place a guaranteed stop. You place a guaranteed stop and you protect yourself.
Right. How do we find this magic thing?
So,
right. So if I go for US 500 at the moment, right?
Yes.
And I go open ticket.
Yeah. And you see where it says stop?
Yeah.
If you press that little arrow down, you can change to guaranteed.
4 points.
Yeah. And
that's all it cost me?
No, that's how far away you can place it minimum.
Got you.
But you see your stop premium below there, 0.6 points.
Right. So let's put this on in $2 a point. Guaranteed 20 ticks away.
Yeah. And you'll be charged an additional 0.6 points to your premium.
That's it.
That's it. Now, obviously,
because it's all. Oh my! so anybody trading on Friday should have had this on.
Yes, that's something that we'd recommend. Going into the weekend, have a guaranteed stop into your position. Sort of.
Why has Wardy never told me about this?
Now, obviously, these levels of minimum stop and the premium can vary depending on the market.
Yeah.
So it's always worth looking before you place the guaranteed stop, but you take some risk off the table.
Is there anything obvious that it's not available
on? Probably crypto. I don't have all of them in my head, but yeah. You can always have a look if it's not available.
But I guess much more useful on stocks rather than indices that are open. I mean, S&P is open 24 hours a day, so I understand why it's such a small charge.
Yeah. Something
like a Rolls Royce, right?
Yeah.
Then that would have been much better.
Yeah.
Arthur Fox Haig, that's a great question. Can you put guaranteed stops on existing positions?
It's a bit more tricky. You actually.
Should we check and come back?
No, you actually can't put a guaranteed stop on an already existing position.
Damn it, Ronnie.
I'm sorry.
Go and sort it. So I've got to close it and open it again.
Yes. So it's not possible to place a guaranteed stop on an already existing position. So if you do, want a guaranteed stop on an already existing position, what you could do is
email Ronnie.
Yeah.
Mate, you've just got 20 emails.
Don't.
I'm going to email you and I'm going to try and get one.
Yeah. So unfortunately, guaranteed stops are not available on already open positions.
Yeah.
Yes, you can move the guaranteed stop once open. You can, as long as you're within the limits, because there's certain limits. You can't put it too close away, as you saw when you added a position, minimum 4 points away. So it always has to be 4 points away. But
yeah,
so you can always.
It's really useful for anybody putting on a position on a Friday with a with a big weekend like this,
Yeah.
I mean, that's huge.
Yeah, I mean, if you're punting and you want to sort of take some risk off the table,
Yeah.
go ahead and.
Oh, Frosty, sorry. No, he's saying that you can't put a guaranteed stop on a position that's already open. You can move it once, if you put it on to start with, you can move it. That's, any point you want. Good. Right. So we've done margin, equity.
Yes.
This is really useful stuff, Ronnie. Thank you for this on a day like this. What else do we have? Liquidation level. Everybody needs to know the liquidation level, don't they?
Yeah, liquidation level is something that's not applicable to. It's not applicable to everyone.
Okay.
So liquidation level is something that you can have as a professional client, but majority of regular retail clients, they have sort of a closeout level, and that's sort of when we are minimizing your continuous risk. So if markets continue to go against you, that's when we close you out automatically. Yeah, which no one wants to happen. So one thing that we do, for example, is so we talked about the equity prior. So you have your margin, which is how much you pay to keep your positions open, and then you have your equity, which is your cash balance plus minus your profit and loss.
Should we put an actual figure on it? So let's say I've got £10,000 in the account.
Yeah.
My margin usage is 4,000.
Yeah.
What does that mean? My equity and stuff.
Let's say you have 10,000 on the account. You put in 10,000. You open a position that has a margin requirement of 4,000. So that's your margin requirement is now 4,000. Your equity. Let's say your position is at zero profit and loss.
No profit and loss. I wish.
Yeah. That means so your cash balance plus minus your P&L, that puts you at 8,000 now because you have 2,000 in margin.
Yeah.
Meaning if your equity, so your cash balance plus minus your running P&L goes down to 100% of your margin. So if your position drops down and you lose 4,000, your position is down now at the same level as your margin requirement, then you'll be on a margin call.
So hang on. So 10,000, 4,000 of margin.
Yeah.
So you had 6,000 of
maneuver, the room that you can maneuver.
And what's that called? That's equity.
Yeah, that's your equity.
Right. So 6,000 of equity. You lose 5,000 of that.
Yeah.
So you've now got 4,000 margin and 1,000 equity. That's when you start to get worried, right?
Yeah.
Yeah.
When you get to 100% of margin, so when equity is equal to your margin, that's when you get on a margin call.
Okay.
And
that's when it's so important to manage that risk correctly.
Yes. Because when your equity gets down to 50% of your equity, that's when you'll be automatically closed off.
Okay.
Now, we always aim to send out emails when you reach the 100%, 75%, but sometimes the markets are moving so fast that there's no time to actually do this.
Okay. Great. Right. Matt Arbour, I can hear in my ear, so he's going to be in 2 minutes. Matt Arbour, king of volatility at IG. He's going to have some really important stuff to chat about. So we'll see you in 2 minutes. Right, welcome back, everybody. On this very tough morning, we have the wisdom of Matt Arbour.
Morning, Rich. How are you?
I am not well slept, let's say. That was a tricky evening.
It's it's fairly scary markets out there.
Yeah.
CFD off the Friday capitulation, and we've seen it continuing. I think it was what was really interesting from my perspective. Sat there, and I've been sat in the seat for a long time.
It's not your first rodeo.
It's not my first rodeo. I've sat through a lot. I sat through September the 11th, and actually that's a relevant point. Friday, the first time I've seen no one, there are no bids, no one's looking to buy any equities. So similar on September 11th. In COVID, there was lots of activity. This is opportunity. Friday was interesting. It was less the selling pressure. There were no buyers out there.
Right. So you've got to mark the prices down.
Yeah,
right?
It's
to
just
try and find a buyer.
Completely. Just UK names that people like to trade, like to buy, coming bottom picking. We weren't seeing that coming in. More surprising, Nvidia. No one wanted to buy any Nvidia on Friday. Tesla was seeing some interest. People were still looking to add to their Tesla positions, but that was about it.
It's interesting, isn't it? Because reportedly, we've got these trillions of dollars of cash sitting on the sidelines, sitting in money markets, but people never want to run into a truck, do they?
Well, people do like to try and catch falling knives. Usually, this is the thing. There's invariably opportunists. You sit on your money for a long time, and this is the opportunity.
Yeah.
With the uncertainty at the moment, you're waiting on a Trump comment, really, and he's a stubborn guy. I think that's the view, and the markets are going to test him.
And that's what it feels like. It feels yesterday they went for his favorite Bitcoin and ETH, didn't they? And that's.
But to be fair, those are small moves on crypto.
True.
When you're seeing blue chips 10%. What was you saw 10% and probably another 5%. And when they opened this morning, those US names, and not just picking out tech favorites. It was indiscriminate, really, across the board. The
Walmart's.
Yeah. Like just core stocks that are not really sanction affected, and just broad-based sell-off. Everything caught out because there are no buyers out there for anything at the moment.
I think it's a really good time to kind of reflect on what a stock is in the short term, right?
Completely.
Everybody knows the idea of, right, okay, it's a long-term investment, buying an earnings stream. But what does a share price represent in that moment?
Well, it's a reflection of how many buyers and how many sellers there are.
So like you say, if the buyers step away and somebody's getting a tap on the shoulder from the risk manager,
well,
get stopped out.
It's over a longer time distilling what we saw in that flash event on August the 5th, or flash event. There, holiday season, whatever, in an Asian session, some surprise news, and less people were at their desks. The liquidity wasn't there. You take liquidity out of the market, and the natural people who are there looking to offer two-way liquidity, who are sat there always providing a bid, always providing an offer. You take that out, and who are the buyers in this market? They've not come out yet at the moment, and this is odd to see.
I wonder, the bizarre situation, I can't think of any time before where one tweet will have us up 12% in an index.
Well, yeah.
If it, I've just spoken to President Xi. We've agreed to have a meeting on trade, tariff postponed. Something like that. Now, that's not happened before anybody is just listening in the background, right? I'm just saying, if there was something like that, then there's bloody buyers and there's no sellers.
Well, it's one of these things. It's who's ahead of the tweet. It's a free roll market. It's a thin market. You're getting these moves, and does the market go up 10% on such a tweet, given what we've seen, like reacting to tweets? Let's step back. This is what Trump said he was going to do.
Yeah.
And he's done it. And the market has kind of sleepwalked into what we're now seeing. Yeah, I've been on lots of times scratching my head at German autos and various sectors of the market that kind of shrug things off. It's all going to be okay.
Yeah. Now, what happens when the Americans come into the office in a few hours?
Well, if we take Friday as the key, it's more of the same, because there certainly wasn't any help. That US cash open, sort of the bargain hunters come in. We certainly didn't see that on Friday. We lurched lower on the US Open. Certainly not seen any support from the Europeans on the Open.
They've got their own problems now.
Yeah. The cash move at the Open. I suppose we get a better picture, over the next half hour. People generally don't like to trade between 8 and 9. At 9 o'clock, reassess, see what's going on, come in. Typically, you'll see a bit of a bounce going to lunchtime, and then a reassessment going to the US session when you get moves like this. But again, we didn't see that on Friday, really.
Now, take us through this idea. If anybody's sort of short puts or in a bit of a mess in options world, as I am myself, what's this idea of rolling? How does that help?
Well, if you're liquid, you can help yourself with the rolling. You're taking the pain, but you're selling again, buying yourself that extra time value, again that extra time value at the richer premiums. But it's
and if you roll down the strike, if you roll down and out, what does that kind of give you? Lower delta?
Yeah, well, yes, but in markets like this, you've got to be very careful with that. The speed that your deltas are changing, that gamma risk onto the downside is, that's theory breaks down, and that's why you see, I've not looked down the curve this morning. Whenever we see moves like this, you'll see puts so far out of the money that have bids on. It's the age-old talk, whatever, a 2000 S&P put for September will probably have a bid on this morning. That's the kind of distortion you get across the market. Yeah. But as much of that is protection, and anyone there just wants to get long a bit of vol who sat there market making, and the market does squeeze clients into these moves. The VIX is being the principal market where this happens. We see an uptick in the VIX is a second derivative of volatility, but the extension you see on the VIX on moves like this, people invariably short the VIX, and the market squeezes them out and chases them out. And
and what happens, because the VIX has different months expiry, doesn't it?
Yeah.
What kind of story is that telling you at the moment?
Well, at the moment, again, I've not looked this morning at where the vols have come in, but the front month will be heavily low. The front month will spike. On a story like this, that front month spike will continue into the back months. Right. The front month is where the reactive money is, and so ahead of an expiry like this, you'll be a significant premium in vol onto the front month, because that's where the action is happening. But it's difficult. We get into we're on day 3 of 2 days here. If we carry on for another couple of days, everything is going to stay bid. Yes, you won't get that initial spike, and things will normalise a little, but those back months will start ticking up higher as well.
Okay, right. So, if I'm just asking for a friend, let's say somebody was short the June 5,100 put in the S&P. What kind of it's now 420 bid. So that's given us a 4,680 break even kind of thing. What options are there around that to sort of manage the position?
It's a function of your liquidity, in essence. You've got it wrong.
Absolutely.
You've got it wrong.
My friend got it wrong.
Your friend got it wrong. Bad advice. You shouldn't give your friend these advice. Whoever has that, it's having a clear head in these markets is the most important thing. Yeah.
Huge.
Have I got it wrong? Take it on the chest. I got this wrong. Has the market got it wrong? There are lots of opportunities out there. There are lots of stocks that have been caught up that perhaps shouldn't be caught up. The market's got it wrong. Whatever you say, it's it's the time to reassess and look at things with a clear head and a clear perspective. You know, we've again, you've been doing this for a while. They're all opportunities. Like, it was so obvious that I should have bought that when that happened because it wasn't impacted by this.
Yeah.
Everyone's had those kind of regrets, and you look back and you can look back on the chart. And go, it was so obvious to have bought Apple at the height of COVID because this is a company that has earnings. They're not, you know, this is solid, and people at home using the devices. It's a difficult where we are here, that we're seeing the market short-term risk of short-term impact, but also that longer tail risk of what does a global recession look like. You know, that's kind of why we're seeing the sell-off. So, you know, take Asian banks out of it, but those more local banks, US, UK banks, getting really caught up in the sell-off when perhaps things aren't changing for them in local markets, but it's that global recession part.
At some point in the next 3 days, 5 days, 2 weeks, is that point when you look back in 6 months' time, and we're all talking about it, in 5 years' time, we're all talking about, do you remember the Trump crash? That Trump crash lasted X number of days, X number of weeks. Can you believe we had an opportunity like, and it's keeping capital.
Yep.
Keeping the clear mind, like you say.
It's the clear mind. It's very easy to rush in and look at those popular names and say, Nvidia was trading at $110 at the start of last week. It's now trading at $94 and probably going to be trading at $88 at 9 o'clock this morning. Yeah?
Yep.
Is Nvidia the stock to buy given where it's looking to sell those chips? Possibly not. So look across, clear head, put it out your, you know, and what you do with your open positions, particularly if it's a geared position, that's where the hard decisions have to be made. Yeah, you can't just tuck your leverage position to a side. Generally, you know, there's capital there. It's geared. You have to make that rational decision. Do I think that's going any lower in the short term? Yeah, there's no point hanging on to that if you think it's going lower in the short term. Take it out, clear head, buy back in. If you think it's going lower in the short term, take the pain out. You know, reassess. Do you want to go back in? You know, it's easy if you have an infinite pot of money.
That's
Trading's
very
easy,
good advice.
but that's not what most of us are blessed with.
Yeah.
So, you know, it's a Monday, had the weekend. It's that, hopefully, you know, if you're worried about your positions, you don't let it. You're not just worrying. You're trying to think clearly. What are the things? What are my champions? What do I believe in? What don't I believe in? What was a short-term trade that's gone wrong and gone more wrong than I could have conceived? Do I want that? Do I want that worrying me? You know, occupying my mind, because this is what happens to you. You become obsessed with the position, you know, winking at you a loss on the screen. Sometimes, and again, not constituting any trading advice, get rid of that, start again, and make those better decisions that you've been doing for however many weeks that, you know, got your confidence up.
And it's not about making it back in the next 2 weeks, right? You know, if you do the right things in trading, then you can make it back over 6 months, over a year.
And it's very tempting in these markets, because when you're seeing moves this quick, you know, you're a superstar instantly, or you're a disaster instantly. Those moves on Friday in the session, what was it? I think there was a point in the afternoon where Coinbase fell 10% in 20 minutes, and
wow,
it's 10%. It was 5%. It was down 5%. Fell 5% in 20 minutes. Bounced back over the next 2 hours, and it's one of those. Was it an obvious trade? Wasn't it an obvious trade? It wouldn't have looked such an obvious trade this morning if you had held that position. Lots of those names where the moves were quite extreme. If you get on the right side of it, you know, don't think this trade that I've done for a short-term move now sits in my long-term portfolio because it's onside. It's that.
I'm classic for that. Well, no, if something,
or even if it's offside, that sits in my long-term portfolio. It's worse often with those winners. Well, God, I've made X number of points really quickly. Yeah. That's great. Put a stop in. Put a trailing stop in. Do something with it. Don't think, yeah, I've picked the bottom of the market. This is now there for a week and I'm a superstar. I've picked the bottom of the market. It's highly unlikely you've done that. Well done. You've got the move right. Put in some protection. Help yourself. Great trade's a great trade. But taking profit is as important in these markets as closing losses. It's that management. There are lots of short-term opportunities. There are definitely some long-term opportunities out there, but think of your allocation of capital on which ones you're doing.
That's what it's all about. Yeah, excellent advice. Matt, I know you're crazy busy on the desk this morning, so have you got another couple of minutes?
Yeah, let's go.
Brilliant. So I think that's really good advice. For example, both mornings I woke up, the very first thing in my mind was, weekend markets. What's the work out the best thing to do? Do I roll? Do I cut? Do I put a stop in? Shouldn't be thinking about that on a Sunday morning, should I?
You shouldn't be thinking about that on a sunny Sunday morning. It looked quite benign on Sunday morning.
Yeah.
Crypto,
Weekend
passive, wasn't it?
markets.
Up slightly. There it was. And, you could... Okay, the rotter stopped. There's been no comments. I suppose that was what people were hoping for, and I suppose that's why we saw the sell-off begin mid-afternoon on Sunday, because there was no sign of activity from Trump. And then we got the "I mean what I say" comments, which is not what people were hoping for.
Yeah. What do you think is the important things to watch for over the next 48, 72 hours? Without your crystal ball in front of you.
without a crystal ball, I think one's looking for those signs of stabilisation. This concept, at some point there is money sat on the sidelines to come back in, that will come in, and walls of money aren't going to pick the bottom, but for some confidence rather than the no confidence that we've seen.
And treasuries have had an amazing week. So, if you're 60-40, then even to move to 61-39, because of course your 60 is now 54, because it's gone down so much.
Well, it's where your difficulty is, I suppose, is the gold hedges that are there. Obviously, gold suffered in the broad sell-off. Gold had a great run up.
Yeah.
And it's gold coming off. What you're doing with the dollar? The dollar's sort of a bit confused at the moment as to what this
really
means.
is.
Different reactions. We talked about it with Ange last Monday. Yen being repatriated. You say dollar yen's kept going down. The dollar had a bit of a bounce against euro and sterling overnight. So that's a mixed play. There are no obvious trades there. It's difficult. Money is on the sidelines, and
if we take a really quick look at everything with regards to currencies and commodities, you can see exactly what Matt's talking about.
Well,
Cable unch.
Yeah.
On a day like this.
Well, the commodities, I suppose, everyone talks to you, Dr. Copper, your indicators of recession. Commodities front load on that expectation of recession. The oil moves we saw on Friday, that really heavy sell-off, not helped by OPEC plus timing. Yeah. Yeah. So those are your good leading indicators on those longer dated futures, certainly of what the market is expecting with that wider global picture. Yeah. Difficult to look at. Not from home. No, don't look at commodities casually and think you're going to infer anything. You can look at commodities full time and not infer anything. They are difficult, but they are telling a story, and what we're seeing across this market is a couple of halves of the same story. The longer outlook on recession. The play on rates is an interesting one. Does the market really care about rates? The states ain't cutting rates soon with this. This is inflationary to the end, as we knew from day one. Jerome Powell knew it from day one, and this zeroing in on individual pieces of data, the expectation that we cut rates. And
CPI is going to be interesting Thursday.
Well,
we've got to make it to that for it.
but how interesting does it become? What's the scope? That tariffs come in, that's inflationary. If you look at the sort of perceived picture of what Trump thinks he's going to do with all the revenues he's raising from these new tariffs, if the maths plays out, I'm not sure. To give people tax cuts, inflationary again. It's looking to increase local stimulus. This all points to rates at best staying where they are in the US, not coming down.
So no intermittent rate cut from you then?
Well, I think Jerome Powell is as stubborn as Trump. He's not going to be bounced by the markets, and Trump's decided that he's not going to, which is the unusual one, not going to be bounced by the markets, because that has been the persistent story, that the markets are the barometer of my popularity and my success, and he's walked away from this.
Right. An incredible amount of information to unpick from Matt Arbour. Thank you so much for coming in on a morning like this, because I know it's...
Otherwise, good luck to everyone. Exciting markets.
Yeah, exciting. And that's what you've got to say. If you're on the sidelines, my God, is there opportunities there? If you are on the sidelines, first of all, well done. And, it's really exciting times.
Yeah. These are, everyone, and again, everyone has looked back and thought, why was I not clear? Why did I not stick? Clarity. What does this mean for the certain stocks? This is where stock picking comes into things. Broad-based indices, difficult. Stock picking.
Absolutely. Good stuff. Active management, active risk management. Matt Arbour, thank you very much. Join us we're going to take what we got. We'll take 3 minutes, and then we've got the US Open. Oof. Right, welcome back, everybody. We're going straight into the All Sessions Open. Good luck. Right, this is, there we go. See, Palantir down 10 straight away. Tesla down 10. Intel down 5. Let's rank this in terms of the biggest losers. Nvidia down 8. Even something like GE's on a wide margin. Be careful on trading these. Make sure there isn't a big difference between the sell and the buy, the bid and the offer, right? Because you can see some of them have got very wide spreads, so be careful. Broadcom down 7, AMD down 7, Uber down 7, Goldman's down 6.5. Is Trump going to say something? That is the question of the day. Is he planning before the US Open to bring some kind of calm to these markets? Because every single one of these CEOs is going to be phoning the White House today. You could take Thursday, right? That's for the greater good of America. Friday, okay, there's a little bit of panic, but this is really starting to bite people. There you see the Treasury bond is the small winner. What about those stocks that outperform on a day like this? Do we have any? Yes, we do. Procter & Gamble, for obvious reasons. Johnson & Johnson, the same. McDonald's down 2. You're still going to be getting your Big Macs. You'll certainly be going to get your Big Macs rather than some extravagant restaurants out there. Visa down 5. That's understandable. Walt Disney down 3. Pete Ward currently at Euro Disney. Having the time of his life, I bet. Talk about roller coasters. There's Space Mountain. I was once on Space Mountain and there was a power cut. So it feels like about as much in the dark then as I am in now about what's going on in these markets. Coca-Cola down 3. So that's not where the real action is it? Netflix down 4.5. Berkshire Hathaway. What's Buffett doing with his money? $360 billion sitting in treasuries. He's just made a good amount of money on that. He's up 9% on the year, performance-wise, or at least he was before today. The S&P's rallying on the back of this open. What do we have? We've got a small, looks like we're in a bit of a delayed market there. Let's see if my Wi-Fi catches up. Oh, look at that. Huge rally in the SPOOs. Huge rally straight off the bat there. 48.25 to 48.90. That's because everybody hedges through the indices, right? If you're hedged in the indices, as soon as the stocks open, then you sell your stock and you buy back the index, right? So that is the reason for the quick jump there. Does that make sense? So you sell the thing that is liquid, right? And the thing that's open. You can only sell something that's open. So that's what everybody does. They cover with their S&P 500 futures. Then the stocks open up. You sell your stock, you buy back the futures. That puts the upward pressure, 55 points in a straight line on the S&P. Don't think we're out of the woods yet, right? That's a bit of a technical thing, but it certainly alleviates that pressure. VIX back down to 11% now after trading 14. Is this a little bit of light at the end of the tunnel? I hear you ask. The FTSE 7662. You see that didn't jump up the same way that the S&P did. Right, let's go back to those moves then, see if that is helping anybody at all. It is a little bit. Palantir having a 1.5% rally on the back of that. Where's your shopping list? Right, where is your shopping list? I'm not talking about down to Tesco's or Asda. I'm talking about that cash that you've got sitting in your pension. The new ISA money, all right? You just popped some cash into your ISA. IG ISA is available on the new IG Invest app. Is this the opportunity you've been waiting for? That's not advice, that's question. Personally, and not to boast because I've lost more than enough on the last 72 hours in trading, but the one decision I did make that was good was 100% of my pension is in cash. I put 50% of that into international equities on Friday, and at some point this week, I'm strongly considering putting the other 50% in as well. So that's been sitting a little bit protected. My ISA, unfortunately, is dozed up, but it does have AstraZeneca, Glaxo, Vodafone, stuff like that in it. Not that even things like that have been particularly protected. Right, let's go down the moves as we have them then. Uber, $62. Interesting. That level, especially with the way vol is at the moment. I don't know how many of you are tasty traders. Have got the Tasty platform, have done our options course. But with volatility through the roof and stocks cratering, it is a very interesting time to look at the opportunities you have to sell put spreads, maybe even puts, right? If you're looking to get into a stock, but you're a bit nervous about what we're seeing at the moment. For example, I might sell a put in Uber today at the $55 level because I want to buy Uber at $55, right? Even if I lose my job here, even if I, have lost a bit of cash in the market, I'm still going to jump on my line bike. I'm still going to be riding around in the sunshine this summer, enjoying the parks like I did yesterday. So Uber, I think the IV ranks, do you remember how to check your IV ranks on Tasty? Some really interesting moves in IV ranks is going to be interesting over the next few days. Now, that's all well and good. I understand people will be feeling pain today with these moves, but just in case you've kept your powder dry, just in case you've been very wise and saw this trouble coming, then it starts to get really interesting. Not necessarily to take action today, but to think about what kind of levels you would be interested in, what stocks you'd be interested in. And there's our favorite Nike back down to the 54 level now. So Nike 54.50 had an incredible roller coaster. Let's take a look at the roller coaster Nike had. You heard it here first on Wednesday. When was Thursday. We did tell you that Vietnam had already promised they were going to act on tariffs, and Trump ignored them. Trump said, no, I am going to put out my announcement, which is announcing huge tariffs on you guys. And I'm going to do that because then I can announce the win afterwards when you come and concede to me, Vietnam. So he did that right here on Friday. And you can see the stock traded slowly up to 54 and then boom, it exploded up to 58. So traded 58 for the rest of that day, and this morning back down to $55. So James Bennett, question. Right, get your questions in. Help me out here on my lonesome with Angeline on holiday, and of course the guys out there hectic busy. How do you buy when there is blood on the streets when you are the blood? Very, very philosophical, James Bennett. I agree with that. It's very tricky, isn't it? It's about what I used to do. 2008, we were in an office on King Street and in St. James's. And on a really bad day, you're already staring at the screen for 6 hours, right? On a really bad day, I would take myself for a walk around the block and just take in that fresh air. Get yourself away from the screens for a moment and allow your brain to come up with ideas. Now, I did it yesterday. I walked, it must have been about 5 miles yesterday, and suddenly I started to gather some idea of how best to risk manage. And boy, oh boy, did I need that when I saw the open at 11 p.m. last night. So, yeah, it's an interesting one. It's definitely not staring at the screen all day long, right? There's going to be a downtime, I would imagine, between 10 a.m. and 12:30 maybe, right? We've seen all the action of the morning, and before the Americans come in and really start trading at 12:30 London time. Just give yourself a bit of a break, do some exercise, get some fresh air. That helps you still be at peak performance at 8:59 p.m. tonight. Isar, how do you think about the value of cash as optionality now? Interesting, Isar. Now, Isar is a man that has traded this very well. You see him on the show, and Isar tempted to stay out, right? Tempted to stay in cash. Definitely the cleanest way, definitely the safest, but in 3 months' time, when you're looking back, at some point, right, there could well be an opportunity, as we saw in March 2020, as we saw in February 2009, as we saw in February 2018, as we saw in October 2022, there are opportunities because this is distressed selling. You heard Matt Arbour say it here this morning. There are no bids. There are forced sellers. When you've got forced sellers and no bids, right, the market has to go to a point where it finds a bid and it hits it. And so it goes to the next one and it hits it. Because forced selling, whether it's getting stopped out, whether your risk manager is saying, get the books down. All right, I've been in that position in the European financial crisis in 2014. Get your books down, McDonald. 2011, when Draghi said he will do what it takes. Get your books down. Usually, you get the tap on the shoulder when the market's at the lows, right? Because everybody's got the same point of pain. Everybody is panicking. I was scared last night at 11 p.m., right? I thought the market was going to be down 2 and it opened down 5. That puts fear through me. And when people are fearful, you got to be watching whether you're making logical decisions. So yes, it's great to stay in cash, but an example of what I'm doing in my pension is I'm feeding it in tranches and choosing names that you really like. Okay, now Isar, I remember you saying to me when stocks were up at their very highs, feels a bit too high. I want to buy it when it comes off. Well, I want to buy it when it comes off. It never feels right to do it at the time because in video you're now seeing it $88, right? Now, let's go back to all the people who feel like they missed NVIDIA. And by no means take this as me saying it's the right time to buy it because it could be too early. But if you were watching NVIDIA at $150 and thinking, I've missed this. Jensen sounds incredible. He sounds like he's going to really take over the world. You can see here that, yes, it repriced to 130. Then we got DeepSeek, of course, and it repriced to 110. But now we're talking about $88. And even to get back to 110, where it was on Tuesday, then you would make $20, 22%, A 22% return in Nvidia if it got back to where it was on Wednesday with one tweet from one orange man. I mean, that is quite something. So, stay in cash. I can understand why people want to stay in cash when they see this horrible, why put yourself in a position of fear? Well, it's called risk. Risk is a good thing when you manage it well, when you take real care on the rules around it, right? Am I prepared to lose 4% buying Nvidia here at 88? I think I am. Now, I've got stuff going on elsewhere that I want to keep my margin for. So I've got to be careful. I'm not in a good position. If you've got cash sitting on the sidelines and you're not involved, you're in a strong position for people like me who are in a weak position. Take advantage of me, right? Take advantage of these opportunities. Hedge funds around Mayfair, that's where the real blood on the streets is. These guys are getting stopped out left, right, and center because they're on tight performance metrics, meaning if they are down X%, boom, they got to get out. And that's what I keep on saying about watching the VIX at 25. When you see the VIX go through 25, as we did on Thursday morning, Wednesday night, Thursday morning, that's when hedge funds are taking risk off. Right? Now, we know that hedge funds have got longs and they've got shorts. They want that one to go up, they want that one to go down. When you're taking risk off, you are selling your long position and you have to buy back your short position. So you do this. And that is a loss on both sides. You're losing on your longs, you're losing on your shorts. The risk manager says you're done on your bike, get out, I'm taking over your book. And when the risk manager takes over your book, it goes into an algo and he sells every one of your positions for you without any care. It is just in an algorithm and it's working over the day, right? Now, I started to see that on Friday. I would imagine that's what we saw again on, and I'm just seeing it here as well, the S&P now going through 4,900. The S&P's recovered 90 points since the all sessions open. That's what I'm talking about, right? That is what we're talking about. That you get that mark up. And when you get the mark up, then you're going to start, well, potentially people start to regret things later on. It's so hard to judge. Look, right? Nobody is good at this. Nobody knows how they're going to do this. But small bits of risk, well managed, and taking a lot of care. That's the way to do it. Right, that's us done for 3 minutes. We've got Martin Harris coming in. Yeah, about 3.5 minutes. I'll let my voice recover. Let Martin do a lot of the talking. See you in 3 minutes. Right, well, who have we here? This is the first segment we've done for a long time together.
It's been a while.
It's wonderful to have you back, especially on such a morning, somebody so wise. Do we want to jump straight in and have a look at this graph you sent me? Because it is absolutely alarming.
Let's take a look.
Right, run us through what this is.
Yeah, so this is taking a look at the impact of tariffs from last week. So this is data taken after the close on the 2nd. So this is just looking at the 3rd and the 4th of April. Mm-hmm. And we try to drill down into the worst affected sectors. So there's a few in between. The only sector I could get, I put it right at the top, it should actually be in green. The only positive number is that global aggregate bond fund.
So which is where all your pension is.
It's where all my pension should have been, is the answer. And right at the bottom, oil and gas production, down almost 18% over those 2 days. Transportation, banks, semiconductors. So these were the most affected sectors. And then you could see there even healthcare providers, IBF, I think it's an iShares ETF, marginally down, I think just under 2%. So even they weren't unscathed.
Oh, the healthcare providers.
Healthcare providers.
Well, let's take it from the worst and let's go through it. Right, oil and gas production. Obviously, the oil price falling, but also people had tried to buy the value trade there, hadn't they?
I think so. I mean, there's big concerns around sort of recessionary fears and what is demand looking like for oil. You then have this kind of knock-on effect that cheaper oil should be better for transportation, should be better for your airlines.
Yeah.
They also got smashed.
That's it. Yeah.
So there's this broad-based kind of sell-off, and there are going to be big opportunities here of sort of finding the winners and losers.
Yeah, because a lot of passive money attacks these things.
That's right.
So there can be a winner in the middle of oil and gas ETF that gets smashed with everything else, right?
That's right. Typically the bigger the company, the worse they're going to be affected. Something that you've mentioned on the show before, I think earlier today, is a lot of the stocks that were winners for the last couple of months or years, those are the first things to be sold because clients want to get out, to get that liquidity, and sometimes we'll cut the winners and leave some of the losers on.
Isn't that interesting? The mentality that we have, not to cut the thing that's worse affected, but to cut the thing that's red on our screen instead of blue or green or whatever.
I think that there's like an element of when something's still in a profit, get it back. You don't want to lose that profit. The same. I looked at my accounts and even my beloved defense stocks.
Yeah.
So the defense ETFs. You got the two big ones in the UK: the Han ETF, NATO, Vanex, Defense, DFNS. Also, those we've had a really good run in defense stocks, defense spending, kind of really changing the fiscal sort of environments in Europe. Huge run, down probably 10-15% in the last 3 or 4 days.
Oh, jeez. Great call by you 4 months ago.
Yeah, it was a good call.
We had a debate about that. So, yeah, very good call.
So what you needed to do is cut that on Tuesday.
Yes. Yeah. So that's right. What that tells me is oil and gas, economic demand, right? Slowdown worries. Transportation, slowdown worries. Consumer and business especially. Banks, obviously, you've got lower rates, collapsing yields, and you've got potential bad debts.
Yeah.
And then we get into semiconductors, which is obvious because it's been a really good performer. Junior gold miners.
So this was an interesting one. Even there was a sell-off in gold miners, and on Friday a sell-off in gold. So something that you would expect maybe some run to safe haven. Wednesday, Thursday, gold was fine, well supported. Yeah. Friday, quite late, had a sell-off. So the gold miners quite late on Friday then had this sell-off. I think real estate and banks go together tremendously. That's where a lot of the banks have that kind of bad debt exposures to these big real estate deals.
Yeah.
And that's just in general, as there's now potential slowdown in business, there's less demand for commercial real estate, there's less demand for office space. That affects the banks. Everything is interconnected here. We spoke about the likes of Nike, right? And
thanks, guys.
Their tariffs and what they're going to. So now you've got higher costs of buying goods. All of the margins are going to get squeezed across the board.
Phil and Terence in the gallery going to take that off for us, show Martin's beautiful face. So you've seen this before, right? You've been involved in the market for long enough to remember these kind of panics. Are we at panic yet? I think so.
This looked like this morning looked like a panic.
Yeah.
Absolutely. I think this is a lot of liquidation of portfolios from Friday coming through this morning.
Mm-hmm. Talk us that liquidation idea. What happens when somebody calls for a redemption?
So I think, if you're looking at, let's say, a mutual fund, or in our case, a model portfolio, and someone wants to sell off and wants money out, you sell out of everything. Mm-hmm. And so that's why I think we see these really broad-based downturns, because you sell off equal weight to whatever the portfolio. So if the client wants to draw down 50% of the portfolio, go to cash, draw down 100%, whatever. Mm-hmm. Maybe they're trading on the side, they need the cash for margin calls. Maybe they're worried about properties. You never know what it's used for. But you go and you sell a bit of everything in equal weight to what your exposure is. You don't go and then say, these stocks are going to be affected, these stocks aren't affected, we're only going to sell some of them. So that's what happens in the mutual funds, in the pension funds, and in the model portfolios.
And talk us through the timing of that. If somebody decided on Thursday morning, first thing, oh, I don't like the sound of this tariff stuff, what's the process of getting money out and you guys having, being a forced seller, essentially?
So look, for a smart portfolio, you're really lucky. So effectively, each client has a segregated portfolio. You go on there and you click close, it's instant. So within sort of 5 minutes, all your positions have been closed. It can be within a couple of seconds.
Yeah.
All your positions are closed. And then you just wait for the cash to settle. And I think one of the great things with IG is you can then still go and trade that cash prior to settlement. You just can't withdraw it. But if you're in a big mutual fund, you send your request to the financial advisor or to the platform, and then typically once a day, they do all of their trading. So if you requested it late on Thursday, maybe you get Friday. If you requested it late on Friday, you're going to get closed out on Monday.
So this, I cannot wait to find out. So I put in my order at 11:50 a.m. to a certain wealth manager in Mayfair, which is a nice place.
Very nice place. It's quite a holy place.
It is indeed, yeah. There's a church around there. Now, that I wanted to sell my money market fund and buy international equity fund. What print do I get on that? I cannot wait to find out.
Yeah, let's see. They're probably, some of the more active ones might have 2 or 3 prints a day. And, they then just have to, on their back end, their admin systems, they're going to draw a line for you to where it was done. Not necessarily where you get sold out at, but they're unitizing the fund. So yeah, good luck with that.
Yeah, but you're buying into markets that are essentially closed, right? Like Japan is 14% Asia that was closed at the time. If I get the last night's closing mark rather than, because Japan was down, I don't know, 4% by that point.
If they've got enough other clients to offset you and they just move your units to their units, then potentially you get that. If someone else closed at the same time as you in the fund that you wanted to move into, then I think you'll get it. Let's see.
Well, I'm not bloody taking it, I'll tell you that. I'm not taking, that would be an 8% difference from doing last night's, the close the night before to getting the open print, which is when it should be.
That's a good question for the platform.
Yeah. Where do we go from here, Martin?
I think
what's the decision process that somebody involved in smart portfolios, longer term investing? What's the decision tree like?
So look, I think there's a few parts of this. One is that there is and what we're seeing in the market, there is a tendency to panic. You need to try and not panic. There are going to be opportunities here. If you were going into this invested in the right type of portfolio with the right time horizon. So typically there's like 2 or 3 factors. Like how many years do you have left to invest? How much risk can you take on? And what does your disposable income look like from a cash management? How many months can you cover yourself for if you were to lose a job or something like that, your expenses? So if you're going into this and let's say, one of the things was that a lot of our clients we saw go into spread betting and try and hedge a portfolio. They can't exit everything. That's something that we are seeing. But typically, if you've got a longer time horizon and you're in a diversified portfolio, you let the portfolio try and work for you. What we're seeing with BlackRock at the moment is that they're looking to swap S&P 500 market cap exposure for equal weight exposure. So they want further diversification in the S&P.
They're looking to do that.
They're looking to that. The risk is that if you've
door bolted.
Yeah, exactly. So the risk is that you've now had significant losses in the tech sector. If there is some resolution, if Trump, this is the art of the deal. If he's, if the whole thing is he starts with the punch to the face, he knew that things are going to get bad, but quite quickly lifts tariffs, make deals. You don't know.
Yeah, because you never, going into war, you never say that you're going to accept an agreement. You take it to brinksmanship.
Yeah. He wants
What
to
is
force. He wants to force the negotiation.
Yeah.
So, should things settle down and you move into an equal weight portfolio, you might, and there's a recovery. You're not going to have a one-for-one recovery with what you lost. So you need a greater recovery in that respect. But for potentially someone who is entering the market for the first time and looking to get equity exposure, you can then take a look at using an equal weight and getting more diversity. There is potential still downside from here. I think we can't advocate, oh, now's the time to buy.
Oh no, absolutely not.
But definitely we've seen panic up until this point.
Yeah, but if you're doing it in tranches, even if it's 7 times 15%, you know, and buying over the next 7 weeks, 15% of cash sitting on the sidelines, you want to start thinking about those things.
Yeah.
And thinking about what levels. Maybe it's levels, maybe it's not time. You know, putting a plan in place. What you don't do is sort of deer in the headlights and chat to all your mates about, oh God, this crash is awful. You know, when you're sitting on the sidelines, when 3 months ago you were saying, can't believe I've missed this bull market.
Exactly. And so you run so many risks here. If you liquidate everything and you're all in cash, new plan with IG, you can earn 4.5% AER. Just had to put the plug in your on uninvested cash in your share dealing account.
Absolutely.
You sit on your cash. You don't watch the markets. Potentially, this could move a lot quicker than we expect. You know, this run down has been so fast. You could get similar on the upside. So, without running the risk of saying this is what you should do, if you go all in cash, there's potential that you can miss the any kind of upward lift
From one tweet. Right, we've got Axel Rudolph up next. What is the trade of the week going to be? Is he going to put his head above the parapet?
It's going to close.
Is it going to be a long?
The short Nasdaq. I think.
Oh, he looks like a
first one.
genius. Short
What a trade.
Nasdaq has paid, and he said to take it to 16,000, and it was within 200 points last night. Well done, Axel Rudolph. Absolute bloody brilliant. That is what we have our technical analysis expert here been doing it for, is it 55 years now you've been doing technicals, Axel? He's coming up next. Drop any questions because you're going to have, technically speaking, I'm sure you've all got questions on this market right now. We might not like the answers, but drop them into the chat now. You're going to get Trade of the Week in 2 minutes and then straight into Technically Speaking, where Axel will be answering your questions for 15 minutes. Drop them in the chat. Thank you for joining us today. We got through it. I want to sleep like a baby tonight. Martin Harris, thank you so much for
Thanks for having me, Rich. Always good to be back.
And subscribe and like.
Hello and welcome to this week's Trade of the Week on Monday, the 7th of April 2025. Now, I've had a lot of questions about last week's Trade of the Week. Basically, it was to go short the NASDAQ 100, and we basically hit my long-term target within days, which nobody had forecast, not even me. And basically, for this week's Trade of the Week, I'm not going to trade. I'm not going to put up a trade idea. And do you know why? Because sometimes it's best just not to do anything, to batten down the hatches, to reduce your risk, and to see what happens. Because basically at the moment we have a lot of volatility. It feels, I'm not saying it is, but it feels very much like a scenario where we could see hedge funds having to basically get out of positions at any costs, having to sell their equity holdings at any level, having to sell other asset classes also just to cover the margin calls. This is why, for example, the gold price also came down last week, at the end of last week, and also now finally Bitcoin coming off. So basically investors have to sell some assets which hadn't fallen before in order to cover the margin calls. So when times like these are happening, when the volatility is very, very high, and also, quite frankly, when the macroeconomic picture is very, very confused and confusing still, with all these comments by US President Trump, etc., it's quite often best not to do anything, just to reduce your risk, reduce your trading size, make sure you adhere to your stop losses. Don't try to hope that you will see a bounce, etc. Just get out of your position. Now, with regards to last week's position, it already hit my target. We went short the NASDAQ 100 at 19,100. We had a downside target 16,500. That was hit, or is probably going to be hit again earlier this morning. So perhaps it's time to get out. If you believe this is the beginning of a major bear market, because it may well be, then obviously you stay short with that position, but perhaps lower your stop loss level to now a take profit level, so just below your entry level, so you've got basically free trade on. So this is this week's Trade of the Week. It is to just sit on the sidelines, wait and see what happens, and to not trade, because sometimes that's best. Hello and welcome to Technically Speaking. Now I've got a load of questions to answer, and basically let's start with the first one. How can you use technical analysis? Well, it's not something I can answer in seconds, but basically if you look at first and foremost the price action is the most important before you start looking at any indicators or oscillators, anything like that, because those are just lagging the price data itself. And as we can see with financial markets, the price action has been extremely volatile. That's telling you that there is a lot of worry in the market. And also we've seen equity markets fall very, very sharply. Again, earlier this morning in Asia, some markets dipping by nearly 10%. So what you do with regards to technical analysis is you look at previous highs and lows, see whether those can act as support or resistance, and you can see at whether that's the case. The problem is when markets become really, really volatile and when forced selling gets into the market, which seems to be the case at the moment, then no technical levels will hold in the short term. It's like having a lot of momentum against you. It's like driving a car very, very rapidly on the motorway and suddenly having to come to a stop. It will take you a while. It's like an oil tanker that needs to brake. That will also take a while before it can actually stop. Same here. Having said that, if we look at the NASDAQ 100, we can see here that, as we saw last week, we went short at 19,100 on our trade of the week, and we had our downside target down here at 16,500. Now, why was it down here? Well, basically because we had all these support areas here going back to the April 2024 low and the high also from December of 2023. So that acts as potential support today. Now we've got a price gap. Now usually price gaps tend to get filled, but it doesn't have to be the case when markets are extremely volatile and very worried as they are at the moment. So I'm not saying that this price gap might get filled, but if it is filled, there will probably be a lot of investors who will sell into this. So just be aware of that. This is the daily financial bet. Now on the longer term time frame, the questions, is this the end of the down move? The question was also posed to me last week. People said, is that the end of the bear market? And I said, no, it could just be the beginning of it. The question now is this an ABC Elliott wave correction? I don't think if it even is one, it's complete. So personally, I don't think so. But if that were to be the case, then that could be the end of the correction. We could then resume our long-term bull market very gradually, as we saw after the COVID decline, because what we're seeing at the moment is quite similar to that one. But if this is just the beginning of a bear market, then we could go much, much lower. And when I say much, much lower, the Nasdaq 100 could easily fall back towards the highs seen in July of 2023. Let me just get my glasses out to tell you the levels. That would be 15,800 or so. It could even go back down towards the October 2023 low. So it is quite possible that this could be a nasty decline. Now, I'm not saying that it is going to be one. You never know what the market is going to do. But if it were to short-term bounce, there's quite a bit of resistance now. These previous lows, which are likely to act as resistance also with Friday's low, this gap low here. Now, what is my view on gold? I've been asked if you look at the gold price. Now, the gold price, long term, I'm a gold bull, as you probably know if you follow this show. And what we're seeing at the moment is that basically the gold price is also starting to come off as funds need to basically sell what hasn't come off yet to cover their margin calls. So that's why the gold price over the last few days started to decline. But long term, you can see we are still in a very clear uptrend. We have a series of higher highs, higher lows. We can see here today we held slightly above these previous highs going back to February and March, or not just February of this year, around $2,950 per troy ounce. That area here should act as support. Then basically the next lower one is this late February low here at basically 2,833. And for me, as long as we hold above there, the long-term uptrend is still intact. And what we're just seeing at the moment is just forced selling of hedge funds, for example, who have to get out of their other positions and equities, etc., and therefore need to cover the margin calls, for example, and sell gold. So that is my opinion. It's a technical opinion. Fundamentally, I still believe that central banks will continue to buy gold, as they may now even more want to move away from having the US dollar as a reserve currency, basically, and maybe wanting to have an alternative to the US dollar because they may no longer be willing to trust the US with regards to what its fiscal policy or even monetary policy might be going forward. Now, monetary policy, today, if you look at expectations for a rate cut, there's a very high chance that we are going to see a sort of emergency rate cut, not the good kind, if you want, at the May meeting by the Fed. And now the market's fully pricing in 5 rate cuts this year. So really, really worried about this potential trade war that we're seeing at the moment. Now, going back to the charts, do I think that bond yields will go lower? And if so, will the UK insurers benefit? Andrew, if you look at yields, I mean, you can see here that yields have been the big beneficiary of the falling markets. So you had treasury notes, etc. I can just show you here. Let me just go on to the, which one shall we look at? Well, why don't we just do the 10-year note in the US? You can see here that that is the futures contract that's gone up, so the yields have gone down inversely. And if you look at the same for the UK, we have basically benefited from this safe haven inflows into bonds, into rates, as people exit basically their equities. So you can see this here also, the futures market going up and the yield basically inverse, which I'm not showing you here, coming down in the UK. Do I think that's going to continue? It's likely to continue. Short term, we might also see it standing here because, again, it's something that hasn't gone down over the last few days. If investors need to liquidate positions, they might do so in the bond markets. Will UK insurers benefit? Well, if you look at the Lloyd's share price, you can see straight away what the market thinks in the short term. And let's look at Lloyd's, for example, here. And we will see what the impact has been on Lloyds Banking Group. And you can see that the shares have also declined in the last few days, coming off their previous highs here, going back to March and also late March of this year. But you can see short term today, we're trying to close the gap, we're trying to hold. That's the same we saw on the NASDAQ 100 daily financial bet. So perhaps we could see some short term stabilization here, because longer term the trend is still fine. And we can see here that we're just testing support going back to the late July highs of last year. But don't forget that the FTSE 100, which only a month ago hit all-time record highs, basically is now trading one-year lows. So let me just go onto the FTSE 100 chart, and you can see here that the decline we've seen over the last few days is absolutely brutal. You can see we tried to close the gap. We haven't quite managed to close the gap with Friday's low today here. And you can see that basically we've went right through the psychological 8,000 mark here. And this is what I mentioned earlier on, you know, when markets come into these phases where they become really, really volatile into those crash territories, basically potential ones, the support levels which have held in the past, like the August low here, just get crashed through straight away. And you can see that that's what's happened here overnight since Friday, over the weekend, I mean. So technical levels not really holding in the short term. Now, for the FTSE 100, there is pretty good support, though further down, but it's quite a long way away. That's going back to the March and October of 2023 lows, around 7,550 and 7,200. So that is possible, because you can see here the descent has been so swift. I mean, from Friday, you can see this decline has been very, very sharp, because basically what happened, US markets came off first, European markets held more or less. They came off slightly, as you can see here, but then on Friday all hell broke loose, and basically the same happened in Asian markets. So can I turn on my watermarks? I don't know what you mean by that, but what moving averages am I using? Well, I mean, they're not going to help you much because they're lagging now, but basically I personally use the 30-period moving average, and I say period because I look at the 30-day, the 30-week, the 30, if I look at an hourly chart, 30-hour, if I look at a 5-minute chart, the 35-minute. So I look at the 30-period moving average, I look at the 55-day period moving average, and I also look at the 200 period moving average. Now, if we go onto the 200 one, we can see here that basically the moving average is, let me just put it on here. So here, let me just try and get the moving average. Let's just change them down here. Let's put this one as a 200, so you can see all the ones I use. And this is the FTSE 100 chart I'm just looking at here at the moment. But it doesn't really matter. I mean, you can look at, you know, other people use 20, 21 period moving average, etc. I mean, this is the red one. And usually people say, well, when a market's trading below the 200-day moving average, even fundamental analysts, then that's not really conducive to further upside. That's more negative. And you can clearly see we're a long way below the 200-day simple moving average on the FTSE 100 chart. And obviously the 30-period moving average, the green one here, is also a long way away. And the 55 day here, the black one also is a long way away. And this is the problem with moving averages. Can you see here? If you use the system whereby, for example, you sell when you cross to the downside once the moving average is pointed down, you can see here the moving average only started to really point it down on the 30 and 55 day simply moving average on Friday, by which time we already had a huge decline. So that's the problem with moving averages, that they lag the price action. And also when the market trades sideways, as has been for the FTSE 100 for several months last year, you will get lots of false signals here, buying above the moving average, selling below the moving average, and so forth, as you can see here. So just be careful when using moving average. Now, they smooth out the price action, but when you've got these very sharp movements, they are not that useful either. Any other questions? I don't know what you mean by RRs, Andrew. Sorry, do you mean relative strength? What do you mean Rolls-Royce. Oh, Rolls-Royce, the share price. You need to tell me what you want me to look at, because you know, it could be an indicator, it could be anything really. Let's look at Rolls-Royce. Well, Rolls-Royce, I think, declined by 20% or so just last week, and it was a huge outperformer. It rallied by over 100, or actually nearly 200% over the last few years. So let's just have a look at Rolls-Royce, and you will see that even here, the holdings are being sold, because basically investors or hedge funds and funds need to get out of their holdings. You can see we've taken out all the previous very strong rallies here, and where did we fall to? The 200-day simply moving average. You can see it today. That's exactly the low, which is why it's always useful to keep these moving averages as potential support or resistance on your chart longer term, even if they don't help you with your very short-term analysis in this case here. But you can see we've held above this moving average. We may see a minor bounce back. The trend here is now not necessarily broken, but it's not as bullish as before. If we now were to fall through these previous lows going back to January of this year, then the trend might actually change direction, because you can see here, if we draw an uptrend line here, we're currently testing that. So we'll have to see where we close today, what happens, whether we can hold above the 200-day simply moving average or not. But you can see that we definitely have a top in place. So it'll take a while probably for us to get back there, and may well be topping out the Rolls-Royce share price in the short term here. Monkey Man, you said, I've got nothing today, just watching and learning. That's exactly the right thing to do. I've got nothing on today either. I mean, I've got positions, but I've got stops in place. I've got everything sorted with that regard, but I'm not putting anything on at the moment, because basically it's just so volatile. I don't know what's happening. I don't know fundamentally what's happening. I don't know what's going on. Even technically, if I were right on my views, for example, if you've got lots of volatility, you may be right on your view and you get stopped out in the short term. So my take on this is batten down the hatches, make sure you trade smaller if you do want to trade than you normally do, and just stay safe. Thanks for watching, Technically Speaking.